In last week's Bottom Line, Neil Melancon examined why we're seeing such high prices right now given the large carryouts in both corn and soybeans. And Neil, this week we expect the answer. What's going on?
Well, Mike, the simple answer is that before prices were too low. If you remember, last week we compared prices in stocks from 2000 to 2006 versus that of the last year, and in the early 2000s, higher stocks meant lower prices. All of that changed somehow in 2007, and the one factor we can boil that down to is the ethanol mandate. You remember in 2007, President Bush mandated a certain amount of ethanol, and the corn use went right into that, which means that demand has remained fairly steady even as oil prices have fallen out. A certain amount of corn has to be used. If we take a look at the carry-out to use ratios over the past 20 years or so, you see in the 80s what you might expect, a high ratio meaning lower prices for corn. However, as time went along, that ratio got much smaller and even today remains low, yet prices somewhere along the line got disconnected from that over the past 2 years especially. Soybeans show the same trend, tighter carry-out to use ratios lately with prices disproportionate to that ratio. We could divide this up into the 80s where prices were low and the ratio was high, the 90s and early 2000s where the ratio was lower and the prices are still low, and the past couple of years where the price is high even as the ratio has remained roughly steady. So the bottom line this week is that the markets seem to have gotten used to the prices being what they are, even though they were low just 3 years ago. And it kind of makes sense. I mean, prices rise as time goes on. Why should farming be any different? Transportation is also a factor here as oil has gone up and back and forth, and that's being factored into these prices. There's another reason that's a little more ethereal, and that is tied to the current financial crisis, and that is as credit liquidity has dried up, risk is being more and more appreciated in the markets. They are not unaware of the crisis going on in the mortgage industry, and they are seeing how much risk is really worth. And so all of the markets and the commodities are being reevaluated as to their real value. That's the bottom line this week. I'm Neil Melancon. Back to you in the studio, Mike.
Thanks, Neil. And of course, to stay up to date with market prices and conditions every day, you can listen to Neil's reports on the Louisiana Farm Bureau Radio Network. For a list of stations where you can tune in, click on over to our website, twilatv.org, and click on the Farm Bureau Radio link.